Welcome back, Mike from Canavan Wealth. It is October. This is my video version of my monthly note that I send out in email or hard format to all my clients, as well as they can catch it here. It's certainly abbreviated when it comes to the market commentary. But in terms of housekeeping, we've got required minimum distributions that I start to process around this time of year. So if you're 73 or older or have a beneficiary IRA, like I do every year, I'll be reaching out and we'll be making sure that we process those. Other thing is hockey season is back in swing here, and the Spud Kings are back at the Mountain America Center. We have 4 season tickets for any clients who want to call in and secure those. You can do that through Lynn at the front desk. They're just first come, first serve. She will get you those tickets. For those of you who don't live in the local area, yes, our Idaho hockey team is called the Spud Kings. Their colors are obnoxious and their merchandise is amazing. They also play to sold out crowds of like 4,200 to 4,500 here at the Mountain America Center, which is better attendance than many of the ECHL teams that play around here, kind of the true minor leagues of hockey. The Spud Kings are just a juniors team, kind of an up and coming league. And I have, of course, very well connected with hockey. My son played all through his high school, and I referee for 10 years now, believe it or not. And I will actually be starting to referee at the collegiate level this year and possibly working with the Spud Kings at some point. So I'm very excited about that. But let's get into the markets because it has been a tough month. So we're down about 4.5% this month. But the real story is, we hit the high of this year really back in the end of July. And we're down about 9% from that high. I think 8% from that actual number. But so this could get a little worse before it gets better, but I really can't imagine we're going to close the year too much lower than where we are. But that's just my opinion. The real news is what's going on with the bond market, 4.7%. You can see this is kind of the recent high of the 10-year treasury was in like 4.2 back at the end of 2022. We kind of reached that again here not too long ago, and then very recently it spiked way up. I was in Moscow visiting my son at University of Idaho for the last couple of days and was a little bit disconnected. I was watching the S&P, but I wasn't watching the bond yields. And then when I get back this morning, I'm listening to Market Watch on NPR. They're talking about a bond market sell-off. I'm thinking, what the heck is going on with the bond market sell-off? You typically only see that under 2 conditions. We assume that interest rates are going to go up, or you want to get your money out of the bond market so you can invest it somewhere else that's going to do better. And the stock market hasn't been doing real well, so that's typically not the answer. And the Treasury has said, or the Fed has said, that they're most likely going to be keeping interest rates maybe up 0.25%, but probably keeping them constant for what I think a lot of people are assuming about a year. So what was going on there? So I got back into the office, talked to Blaine, a very seasoned advisor here who I talked to quite a bit about the markets. I say, explain to me what's going on with the bond market sell-off. This just makes no sense to me. And his answer is, I have no clue. It all makes no sense to me. So I jump on the Wall Street Journal to get the experts to tell me what is going on. And we get quotes like, this is from a former New York Fed exec, "It's perplexing. No fundamental explanation is convincing." Or from Janet Yellen, "It's a great question. That's one very much on my administration's mind." So even the experts don't understand this. Blaine and I kind of concluded that we think this is just kind of emotional investing. The economic data has been very good, right? Jobs numbers, we get unemployment, I think tomorrow. We expect earnings to be fine, not amazing, but normal. Housing market, I think, ticked back up in July. The economy is doing really well, so people think that interest rates are going to go up again. I find that hard to believe. I do think some economic troubles are on the way. The only reason we would expect interest rates to continue to aggressively go up would be if the economy continued to do remarkably well, and the Fed feel like now they're not just fighting inflation, but they have to try and get the labor market and the housing market and things like that under control by raising interest rates. And when the Fed funds rate was 2%, being scared of raising a quarter or a half or something like that was a little bit more viable. I just don't buy it with what Fed funds rate is like 5.25 right now, another quarter rate. Even if they raise it 0.5%, just don't buy it. It's going to be doomsday to the bond market. It would take a lot to scare me out of a 4.7% 10-year treasury compared to what I suspect you're going to see a year and a half from now. Who knows? The one thing that is always certain about the market is it will never do what you expect it to do. So maybe these comments will age very, very poorly. 12 to 18 months from now, and the 10-year Treasury will be at 6% or something. But I don't buy it. So I wish I had better answers of what's going on with the bond market, but the experts and I are all kind of scratching our heads. I do think this is going to be short-lived. I don't think we're going to stick up around these rates. The thing of what the article does say is that they're just demanding extra yield for a longer date investment. Right? There hasn't been a whole lot of investors holding on to 10-year Treasuries lately, and now that that's becoming a more attractive investment, we might be back to this world of like, well, if you want me to invest for that long, although you can sell 10-year Treasuries before 10 years. If you're going to expect me to invest that long, then I need better interest rates. Was kind of their only stab at a reasonable explanation of what is most likely just an emotional investment going on. That's really it. I hope this has been informative. If you have any questions, please reach out to me, Mike at CanavanWealth.com. Otherwise, I will talk to you soon.